In this video, I want to consider building wealth over time, the long-term approach to stock investing. Developing a long-term perspective in stock investing involves adopting strategies and mindsets that focus on sustained growth and avoid short-term distractions. So here are key components to help cultivate a long-term approach to stock investing. Number one is set clear long-term goals. You set a clear long-term goals, and this will involve, establishing specific financial goals such as retirement. It might be education funding or wealth accumulation that you aim to achieve over an extended period. Number two is focus on fundamentals. You focus on fundamentals, and by so doing, you are investing in quality. So choose stocks based on strong fundamentals such as robust earnings, solid management, and competitive advantages rather than on short-term market movements. Number three is develop a solid investment plan. Develop a solid investment plan. So in this case, you talk about creating a strategy. That will involve creating, a strategy. Formulate an investment strategy that aligns with your long-term goals, risk tolerance, and time horizon. This plan should guide your decision and help you to stay focused, to remain on track. You must have a strategy that will guide you on the long run. Number four is adopt a buy and hold strategy. You adopt a buy and hold strategy. This will involve, long-term investing. So invest in stocks with the intention of holding them for many years, allowing your investment to benefit from compounding and long-term growth. Compounding actually at the end of the day will help to grow your wealth. Number five is emphasize diversification. Emphasize diversification. This will help you to reduce risk, to mitigate risk. Diversify your portfolio across different asset classes. You diversify across sectors and geographic regions to spread risk and reduce the impact of any single investment, poor performance. In case a particular stock performs poorly or a particular investment performs poorly, it will not, largely affect the performance of the entire portfolio. Number six is regularly review and rebalance. Regularly review and rebalance. Maintain balance in this regard. Periodically review your portfolio to ensure it aligns with your long-term goals and rebalance as needed to maintain your desired asset allocation. Don't forget to rebalance your portfolio regularly. It might be quarterly, it may be twice annually, it may be annually, but make sure that you rebalance your portfolio whenever the need arises. Number seven is stay informed but avoid overreacting. Stay informed but avoid overreacting. In this case, you consider market updates. So keep informed about market trends and economic news, but avoid making impulsive decisions based on a short-term fluctuation in the market or market noise. Stay informed. Stay grounded. Don't be carried away by externalities, by noise in the market. Number eight is invest in growth stocks. Invest in growth stocks. So seek potentials for growth in the stocks we are invested in. And this will involve a focus on companies with strong growth potentials, and a history of innovation, which can offer significant long-term returns despite, short-term volatility in the markets. Make sure that when it comes to your asset mix, when it comes to your stock mix, don't disregard growth stocks. Inculcate growth stocks, even, within your long-term investing and strategies. Please, and don't forget to like this video, give it a thumbs up, and subscribe to this channel. Number 9 is understand market cycles. Understand market and cycles. Be patient. When it comes to investing, patience is key. Patience is very, very important. Recognize that market goes through a cycle of ups and downs. A long-term perspective helps to remain, helps you remain patient and avoid reacting to temporary downturn. The market will always fluctuate. So what do? You remain calm. You remain patient, and collected. Don't allow the volatility to influence your decision to buy or to sell. Make sure that you remain patient. That will help you in the long run. Number 10 is avoid timing the markets. That is you have that particular long-term focus. So resist the temptation to time the market or make frequent trades based on short-term predictions. Instead, focus on the long-term growth potential of the stocks or the companies you've invested in. Make sure that you have that long-term horizon built into your strategies, and don't allow short-term fluctuation, short-term opportunity, short-term profits to make you sell your stocks. No, make sure that you hold on to your stocks, because in this regards, you are a long-term investor. You are, an investor that has a long-term horizon in mind. Only that's number 11. Leverage compounding returns. Leverage compounding returns. In this case, you reinvest your earnings. You reinvest your returns. And so reinvest dividends and interest to take advantage of compounding returns, which can significantly enhance your long-term investment growth. When you have your dividend, don't just waste or squander or spend it. You reinvest your dividend into the market, reinvest your dividend into the portfolio. That will help you to take advantage of compounding, in the stock market, and eventually you have an outsized, return at the end of the day. Number 12 is maintain discipline. Maintain discipline. Stick to the plan. Of course, you must have a clear-cut objective. You must have a clear-cut plan. You must have, a strategy. Stick to it. That will help you in the long run. Adhere to your long-term investment plan and avoid making decisions based on emotional reactions or short-term market conditions. Not only that, number 13, be prepared for volatility. The market will always fluctuate. The market is ever volatile. And so seek undervalue them, or rather embrace ups and downs. Actually, the market will always fluctuate. So embrace this volatility in the market. So accept that stocks investing involve volatility, and be prepared to ride out market fluctuations, without altering your long-term strategy. Number 14, focus on value investing. Very, very important. As a long-term investor, don't neglect value stocks. All right, make sure that you incorporate value stocks into your strategy and focus on them. And so seek undervalued, neglected, or ignored, stocks. Invest in undervalued stocks with the potential for future growth. This approach often aligns well with a long-term investment horizon. That is it. You want to invest for the long run. You want to invest for the long term. Make sure that you seek out, all those undervalued, neglected, ignored stocks, because they are usually very cheap. And normally, when it comes to investing, you make your money when you buy, not necessarily when you sell. If you buy cheap, you will make a higher profit. If you buy an expensive, investment or stocks, you might, it might eat into your overall returns at the end of the day. Number 15 is educate yourself continually. Educate yourself continually. So continue learning about investing. Don't stop learning, market trends as well as financial principles to refine your strategy and make better informed decisions. So by adopting these practices, you can develop a long-term perspective that helps you navigate market fluctuations, capitalize on sustained growth, and achieve your financial goals. When it comes to long-term investing, these are the factors we're going to consider if you really want to emerge at the top at the end of your investment journey. So make sure that you incorporate all these plans that will help you to build wealth over the long term.